Welcome to Markets Now. I'm Michelle Rourke with Darren Newsom, Senior Market Analyst with Barchart. Well, grains were lower in corn and soybeans this morning. Wheat's trying to hold on to some gains. Cattle are to the plus side, and we do have, well, at least the financial sector still holding on to gains as well. And Darren, a lot of that has been based on the news that the ITC court has ruled that these tariffs the president put on are actually unlawful, right?
Correct. And, we knew that. We knew that the law that was being cited basically was supposed to keep approval of things like trade wars, tariffs, and so on in the hands of Congress, that one person, depending on their mood that day, could not completely control, either threatening tariffs, taking them off, and so on. So, naturally, it has been illegal. It always was illegal. The question is now, does it matter? Because as we've seen, what is legal and what is illegal doesn't necessarily concern the U.S. administration all that much. It all has to do with what kind of quote unquote deals can be made, like private jets, $400 million private jets, and so on. That's really the key to all of this.
So you think even if it goes to the appeals court, that's all just smoke and mirrors here because the president's just going to do what the president's going to do?
Yes. Yeah, it's not going to change anything. In fact, we're coming up on another weekend, so don't be too surprised if we don't see headlines, again saying, "Oh, we're going to threaten the EU with another 150% tariffs," or whatever it was last weekend. And then we'll get through the weekend, and late, Sunday afternoon, after his rounds of golf or something like that, he will say, "Oh, wait a minute, I'm going to postpone them again," or some country, some alliance somewhere. So it's just more of the same. At some point, the market's going to figure this game out. It did back between 2016 and 20. But we'll see. So far it seems like the intelligence part of artificial intelligence with these algorithms is a little bit slow to learn this lesson or relearn this lesson.
That's right. But my question is even if it isn't true, you said the market is starting to be kind of, disbelief about tariffs. And so what leverage does the administration have in the long run to negotiate all of these trade deals that they've been talking about?
Yeah, there's actually no trade deals. But, the question is, what leverage does the administration believe that it has? And quite frankly, it comes down to U.S. resources. The U.S. still has a great deal of resources that other countries do want. But, again, this game has grown thin. We've seen other parts of the world just say they've had enough of it. Quite frankly, few countries around the world anymore take the U.S. very seriously. So I don't know that the leverage is there like the administration thinks it is. But who knows? Maybe it actually is. But these negotiations have nothing to do, or these quote unquote negotiations actually have nothing to do with U.S. trade. So in the end, I just don't know that it's going to make any difference.
Well, and the response that we've seen has been somewhat positive, at least initially in the financial sector. The ag market acted like it really didn't care, right?
Right, which is a relief because here, again, the ag markets are weather derivatives. And so, we can look at the cash prices, and as we come upon the end of another month into the marketing year for the wheat subsector, we can see that by using cash markets and applying the economic law of supply and demand, that there's plenty of supplies on hand to meet demand, whatever demand might be, whatever supplies might be. We don't know the actual numbers, but we can tell by the market price that we have plenty on hand. And as we look ahead, we're getting ready to move into winter wheat harvest. There's going to be some early corn harvest again because we saw early planting. We could tell that in the September-December spread, particularly along the East Coast and in the Southeast. So we know there's going to be new corn supplies coming on hand. And as we get into the summer months, all these new supplies are going to start refilling the pipeline. We're not going to run out of any of this. And this is where the pressure is coming from. This is why the markets do not have to care about all of the silliness, all of the threats, all of the postponements that have to do coming out of Washington, because the reality is, it's a supply and demand situation. Weather is the key driver, and weather right now seems to be favorable for most of the crops.
Yeah. So We've been trading weather. We did yesterday. That's why corn and soybeans tanked, and we're seeing some follow through selling this morning. We also saw bear spreading in the market in the corn, which was very interesting with talk of maybe some cancellations of export business. Yet this morning, we saw a couple of flash sales. So what's going on?
Yeah, to begin with, it's very difficult to read. We don't really have any old crop future spreads. So, I mean, while there look to be some bear spreading, we have to kind of draw the line and remember we're talking about two different markets. Yes, July corn was down 8.5 cents. Yes, September was down, 3 or 4 cents, something like that. But the September contract is a hybrid. And right now it's leaning more towards new crop, which tells us that we had all those acres that we thought were going to get planted as watching the markets over last spring and winter, last fall and winter. So we knew there was going to be more acres and they got planted early. So, that September contract moved from being an old crop to a new crop contract. So it's hard to say, yes, there was some bear spreading. But just by this July contract itself, it looked like there was some cancellations without all the rumors and everything. And then sure enough, turn around this morning and we do get that flash sale, small sale to Mexico and another small sale to unknown destination. So it was interesting to see again, but we're continuing to see some pressure on the July issue. And what it tells me is, again, the market knows we've got enough corn to get through the rest of the old crop year. And we're going to, the attention's turning to new crop.
Plus, we're also seeing Brazil's corn just about ready to come to market. And so there's increasing production estimates there on the second crop. Is that also pressuring the corn market, you think, or not?
Oh, I think so, yes. Because again, what if we look at the weekly export sales and shipments reports, particularly on the weekly export sales, we see that it is still Mexico that holds the bulk of the unshipped sales here for 2024-25. Well, Mexico has an interesting southern neighbor. And there's been a lot of work done on Mexico's southern ports, Brazil's northern ports. Back in this administration's first time around, there was a lot of infrastructure work being done because of all the trade nonsense that was going on. So if Brazil all of a sudden is raising this larger second crop and they're going to have more supplies, not only are we seeing that possibly start to affect the July contract here in the U.S., but it could be part of the pressure on the September as well, as it's been losing ground to December. So again, it could be telling us that not only is U.S. going to have plenty of supplies, it could start to lose some of its demand as we look ahead into next marketing year.
Yeah, and July corn took out 450. That was pretty good support, wasn't it?
Yeah, it was. I like to watch the round numbers in corn. I call it, corn's characteristic round number reliance. And not only did July take out 450, but we've seen new crop December take out 440 here Thursday morning. So, these round numbers are starting to give away. And what usually happens, or what tends to happen when this occurs, is they drift to the next. They go down to the next. So, it opens the door to 440 July, 430 December. And then if those don't hold it, it's just a repeating cycle. So certainly something to watch is, again, the closing price is more important. See if we can bounce back and get back above those levels. But again, we're coming up on the end of the week, end of the month, and end of the quarter. It's going to be an interesting time.
Yeah, and that's true for soybeans as well, as we've taken out kind of some key moving averages here this morning, but we don't have the funds short in the bean market like we do in the corn market. So a little difference there, right?
Yeah, and it's actually a bit more of a risk to the soybean market because the funds are still long, still have a net long futures position. They can start to liquidate, particularly, again, as we come towards the end of the month, into the quarter and all of this other stuff. So there's the possibility that we could see some liquidation because, again, we saw the cash index drop below $10. It came in at about $9.99 Wednesday evening. So, we're seeing that the cash market is continuing to come down. We've got quarterly available stocks to use running around 15% or something like that. So it's quite high for this time of year, about average for the past 10 years. So, I mean, there could be some renewed pressure on the soybean market if we see funds say, okay, this market's not going anywhere. We can just start dumping this and maybe looking for another market that has a fundamental reason to rally.
Right. And weather is favorable. So the soybean market is basically trading that, right?
Yeah, as we look out into the new crop, that's certainly the case. We can see that in the November contract, just basically locked in at these levels, not really able to go anywhere. And again, there's just not going to be any big push, on the buy side because there's still going to be plenty of soybeans, even with fewer acres. We don't really know what production is going to be, but whatever it is, the commercial side continues to indicate it's comfortable.
And the wheat market trying to hold on to some gains here. Most of those seem to be short covering. But my question is, now that we're getting into harvest, Texas has already started. Are we going to be able to hold any gains at all, or are we going to have to take out the contract lows here as we start to move the harvest forward?
I think we will take, and again, wheat is wheat, so it's always a fool's game to try to guess. But just looking at seasonal patterns, looking at supply and demand, I mean, we've got future spreads covering a large amount of calculated full commercial carry. So this, the indications are as these supplies continue to come in and with very little demand, we are going to take both the hardwood winter and softwood winter markets to new contract lows. And then possibly we start to bottom this thing out. If we keep a close eye on what the cash indexes are doing, a national average basis for both is running weak. So, I mean, it just tells us that the commercial side is expecting more supplies to come in and that we're not going to run out of wheat anytime soon. Again, and we can take this out to the September-December spreads as well, where they're still covering 67 to 70% calculated full commercial carry. So again, commercial traders are confident that whatever the harvest turns out to be, it's going to be plenty, at least to get us through the winter.
All right. Well, you're sure Debbie Downer this morning.
Yeah, that's kind of my job, isn't it?
Okay. Thanks so much, Darren Newsom, Senior Market Analyst with Barchart, and that is Markets Now.